To me, this is a pretty textbook market reaction to these geopolitical tensions, said by Alvin Baker, Informa Financial Intelligence. Alvin, the big news of the week is Donald Trump's fire and fury rhetoric against North Korea. This appeared to have a heavy impact on the currency markets. So in your opinion, was this market reaction justified?
I think the reaction has been justified over the week, though it's been a bit patchy. The main beneficiary has been the yen, followed by the Swiss franc. Both seem to have appreciated against the dollar and euro respectively against the euro by 2.5%. The dollar has been quite neutral, all in all, even though it's fallen against the yen. It's held its own against other currencies to leave the trade-weighted index pretty much near Monday's levels. The other main currency movements have been against the emerging markets and commodity block currencies, which appear to have been the hardest hit. To me, this looks like a pretty textbook FX market reaction to a geopolitical event such as this. And there's reasons why it may stay very nervous and the trend continue, because I don't think this particular geopolitical event is going to be resolved anytime soon. The two leaders seem hell-bent on pushing each other to doing or saying something more extreme than they've said or done before. And it seems that both mavericks could actually make a tragic mistake, though diplomacy behind the two leaders seems to be a little bit more sensible. But we'll have to see how it pans out over the next few weeks.
UK trade data for June fell well below expectations. Now, should sterling traders be prepared for Britain's trade gap to get worse before it gets better?
Yes, another yes reply to this question. Yes, the trade gap, the headline widened to the largest deficit since September last year, and the third increase in the deficit on the spin. So that there are some worries that the Brexit process being delayed because of the election has made the UK vulnerable to adverse trade dynamics. Unless Brexit clarity emerges soon, and there are some stories going around that the UK is putting together some documents ahead of the next meeting in October, the EU heavy-duty meeting with UK to thresh out the terms and conditions and the unresolved three main issues, that the trade balance could continue to be very erratic. While the pound has steadied against the dollar, most of its volatility has been against the euro. And because the UK imports a lot more from the EU than it exports, the deficit won't get any better anytime soon.
Finally, some European exporters are beginning to worry about the strengthening euro. The big question here is, are the economic fundamentals in favour of the euro at present?
Okay, another yes reply to your question. The economic fundamentals in favour of the euro look set to continue. All this barring a cataclysmic geopolitical event. Well, we're assuming that isn't going to happen despite the raised tensions. So looking at pure economic fundamentals, it seems the Eurozone economy is set fair for a very strong year, predicted to grow 2% this year by many, and there's probably enough momentum to carry the economy forward by a similar size advance in 2018. There will be some harm for Eurozone exporters. Italy in particular has been singled out, but Germany by and large should be able to withstand the sort of appreciation that the euro's seen so far. even though euro yen is off 2.5% this week, quite a big move in such a short space of time. The outlook for the euro is still positive. This is mainly on the back of the ECB, which is expected to start its tapering process from September. The market is divided between September and October. The fact that it's going to start the long normalisation process should continue to underpin the euro, and it's whether the tapering process actually includes rate hikes being announced for 2018 to pre-warn the market, just as they've pre-warned the market about this tapering process. So if higher rates are flagged at the September or October meeting for next year, that should push the euro back up, and it could quite easily recoup its losses against the yen, notwithstanding the fact that there's no geopolitical explosion hitting markets.
Well, Alvin, thank you for taking the time to tell us what's been moving the markets this week. That's all from us. Have a great weekend.